Welcome back to the channel today. My name is John Mazzara with Remax Results. I have Ivan Oberon today. He's with Edge Home Finance and his company is Your Kingdom Lender. Ivan, tell us a little bit about yourself and then let's talk about the no income, no employment option loan.
Yeah, thanks so much, and great to be here with you guys again. Ivan Oberon, your Kingdom lender. I'm an investor and an active, independent mortgage broker for pretty much anything having to do with residential real estate, whether you're an investor or a first-time home buyer or anything in between, builder, developer. And this particular loan program is pretty unique. And it's definitely not for everybody, but man, there's always that one person out there that they just really have no options. And so there's a whole bunch of different ways that we qualify somebody to get approved for a home purchase. And the one that everybody's familiar with is, of course, the traditional, conventional FHA, VA, full income qualifying, where you provide all your tax returns and your W-2s and pay stubs and all the myriad of things. And if you're lucky enough to be able to qualify for the home price that you're looking for and have some money down or no money down, if you want to go some of the down payment assistance routes, then good for you. But if you're, let's just say you're self-employed or you haven't had the worker employment history, well, now we have other creative programs like a bank statement only program, and we did a great video on that. We have P&L only. We have even W-2 only, which is kind of a creative twist for somebody who's not self-employed, but they have weird kind of variable income sometimes, or maybe you just switch jobs and you changed your the way they pay you. So there's a lot of different cool creative ways that we can get you approved that way, kind of non-conventionally. Right? And then beyond that, you have other programs where you can qualify just based off of your assets. Okay, I have really no income, no employment that I can show. My tax returns are weak for whatever reason, but man, I got like $4 million in the bank. Okay, that's a whole nother cool creative way. Now, this one right here, it kind of falls if none of those things work, right? But you can meet certain things. Okay, here's a loan where there's no income and no employment documentation required. It's a very like just do you have a decent credit score? Do you have a certain amount of money down? And does the property appraise? And those are the main things that they look for. It's not available in every single market, but that's where you have to have, yeah, to be on the safe side, because the program guidelines are tightening up a little bit. To be on the safe side, you want to be able to put 25 to 30% down and have at least a 720 credit score, and this could be an option for you. Okay, and that's pretty much all they ask for is a property value that comes in and a property that's in good condition, decent credit score, and a good amount of money down. And this could be a good option for you if everything else has failed you.
So this no ratio loan, I'm familiar with them from the old days when they used to offer them.
Yeah,
And they worked really well because it wasn't I'm going to call it the old stated loans where you
yeah,
would state your income. So you don't have to make any financial statements that might or might not be misrepresenting what's going on. So I preferred as a broker the no ratio loan because you were not making any statements. It was just
hmm
here's the basics. Now, back in the day, they were only doing them on single family, and I think maybe a couple of them were doing them on duplexes. What type of properties are you limited by today, and can an investor do this, or just owner occupants?
yeah. Great question. It is limited to single family residence, primary residence, owner occupied only.
Okay. Could a single family residence be a condo or townhouse, or are we talking just single family home?
Just a straight single family detached home.
Okay. So no associations, or could they have like an association like for the
Yeah, it could be a
yard
PUD.
maintenance, that type of thing?
Sure, it could be a PUD with an HOA.
Okay. Okay, awesome. So this would be really be good for somebody that was in corporate America that left and now started their own gig and says, well, you know what, I don't want to wait a year or 2 years to buy a house. I want to buy a house now. And I have a
Sure.
nice severance package and I'm ready to go and I got I can put the 25% down and credit's great. Let's do it.
Yeah. Yeah, and of course, like everything else, risk factor plays a role. So if this is your only option, don't expect to get the interest rate that you see advertised online.
Sure.
Uh, and by the way, that's a good point. Don't ever expect to get the interest rate that you see advertised online unless you're willing to pay points, right? Because that's how they get you on all those online advertisers. But so just have a realistic expectation of the rate, and generally for something like this, the rate is going to be closer to at least 1% higher than that
Ah,
you could receive on, say, like a full income qualifying loan.
yeah, that's a gift. If the home goes up by 10% and I got to pay 1% more, I'm still,
Yeah,
because of the leverage, I'm way over the 9% with the leverage. So it
yeah.
makes a lot of sense. And I like to say date the rate, marry the home. So
Hmm.
I can always refinance.
Yep.
So if I'm just getting going, I'm gonna, whatever, for whatever reason, I'm a startup, but I don't want to rent for a year. I can buy the home after a year or after, depending on the program. I can always refinance. Uh,
Right.
but meanwhile, I got myself locked up in what I need, and especially for somebody like with dogs, good luck with that.
Yeah.
So,
Well,
um,
like you said, I always say that it's always a good time to buy real estate.
mm-hmm,
Right? When's the best time? Right now.
yep,
The sooner you start acquiring real estate, the sooner you start getting advantages, like your tax advantages, as one example, but it's also the sooner that you start building equity. And as you know, real estate is something that's always appreciated. If you look back since the time that they've been tracking it, it's only gone down really about one time. It's gone flat a couple of times. And the one time it went down was during the meltdown that we know is never going to happen again. So
yep,
that's really the key. The sooner you can, the better it's going to be for you long term.
absolutely, absolutely. I've been doing this since '86, and I've been, like you say, I've been through the Y2K, the Gulf War, the second Gulf War, the savings and loan meltdown. So yeah, I've been through it all, and
Oh,
other than that strange range of '09 or '07 to
yeah,
call it 11, you know, history which won't be repeating itself. I don't believe either in
no,
that range.
yeah.
Well,
All
very
right.
good.
So if that's your only option, just give us a call and we'll see if it's a fit for you too.
Awesome. Thank you for sharing that program. And anything else you want to talk about that, or should we wrap this one up?
Yeah, no, that's the nuts and bolts of this one. It's pretty straightforward.
Okay, no ratio, no employment, no nothing, just good credit and a down payment. Single
Yeah.
family house, owner occupant. Ivan's your guy. So his information will be down below in the video. He lends nationwide. Give him a call. Thank you for watching.
Thanks so much, guys.